The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Good afternoon, everyone. John Darcy, Editor-in-Chief, back here for the daily recap. So we had another interesting day in the market, and as we talked about this morning, volatility is really starting to ramp up as we get into March. March Madness is starting early. That's what I said in the morning note this morning. And you know, traders are welcoming it, I think. We had that slow grind higher to start the year. It was sort of hard for shorts because they kept getting squeezed at every turn, even though it wasn't major squeezes. And you had longs sort of looking for a way in that couldn't find a way in because we just kept churning higher. But now we have some very whippy action. You're not really seeing much follow through from day to day. Some crazy action. We'll go to the chart right away here. On Monday, we had that big wide range down bar in the spiders. We're going to go to the chart here, Ed. There we go. Big wide range down bar in the spiders. That was, it looks really bad because we also gapped up big, and a lot of people thought that was going to be a major complexion change. Then we sort of stopped the bleeding, found our footing on Tuesday, and then Wednesday we really saw that extension to erase all those gains from Monday. Yesterday was a little bit of a day of rest. People thought maybe we'll rest and challenge highs again, but we walk in this morning and what do we have? We have the S&P opening about 8 or 9 handles lower, and we have the sequester happening. It looked in the earlier days this week, it looked like people weren't that concerned. People in the market weren't that concerned about the sequester. You came in this morning, suddenly everyone's up in arms about all these spending cuts and what they're going to do and this and that. You also had some bad data from Europe and Asia that weighed and helped weigh down the futures. So you don't know how much the sequester played into that gap down. But then, despite a lack of an agreement today during the session, you still saw stocks able to rally and close that gap and finish positive. I think the big things that helped boost the market this morning from a macro perspective was positive data at home. We had some weak data out of Europe and Asia, but the data with the ISM and consumer confidence was they were both positive this morning. You had the ISM showing manufacturing growth at its highest level in 20 years, which is obviously a huge positive, and manufacturing growth is seen as a leading indicator for the economy. So hopefully we'll start to see the employment picture pick up and start to see GDP grow at a higher clip. But today's ISM is definitely a step in the right direction from a data perspective. We'll go ahead and start taking a look at a couple stocks. This morning in the morning call, I talked about Apple being a very clear short setup in my mind, even though sometimes traders they're conditioned to trade Apple from the long side. Sometimes I think with these strong stocks, you have to take off the blinders and you have to really take a look at what the pattern is showing you. And Apple, if we go to the chart, we'll move over to Apple here. It was basically showing a dead cat bounce after that earnings report. You had the gap down. It wasn't able to bounce into the gap. It was, after a couple weeks, it was able to enter the gap, but was rejected at this resistance level and then, traded lower onto those lows. And today, David Einhorn announced he was withdrawing his lawsuit that was aimed at getting Apple to release all their mountain of cash. And then, it bled lower and was a pretty clear short setup, in my opinion, if you didn't have your blinders on, like I mentioned. And you also look, a couple of the other ones, for full disclosure, I'll show a couple of the other stocks that I talked about as possible shorts today. Lululemon, it's a very thin stock. It's sort of tough from a day-to-day perspective to really pin down the action, but you saw it bounce. It still looks like a bearish pattern. I think if you're going to be trading this, you need to have a swing trading mentality with it and not, get shaken out of every whip like we saw today. But I still think it's a bearish pattern, and you can look to short it going forward on any market weakness. You look at Baidu, that one was, it's not quite as bearish given the break higher out of that flag pattern, but I still think when you take a macro view of Baidu, it still is a weak stock that, if you want to still believe in that short, today might have been a good day to add to it. You saw the market bounce back very well during the session when Baidu didn't really gap down, so it was able to post some nice gains on the day in that way. One of the biggest, most active stocks in the virtual trading floor today was Facebook. which has been sort of off traders' radar a little bit recently because it's been a bit lackluster. You haven't seen much follow through, and the stock since topping out prior to earnings has been sort of a dud from a trading perspective. But today you had sort of a mini little flag pattern here. Mark Sperling was all over it in the virtual trading floor in the morning. That's the value of the virtual trading floor. In my opinion, it pays for itself within the first couple trades. But Facebook was another great one in the room this morning that people were all over. And we go back to the chart, you see that flag, you see a nice clean move above it. We'll see what that leads to. You could make a case if you really want to be bearish on it that it got rejected at its 21-day moving average. But I think Facebook this year has some promising prospects, and I think it can go higher. We'll stick in the social space with one that was more in the news, and that's Groupon. They announced, they had a very weak earnings report, which appeared to be the last straw for the only CEO the company's ever known, who they announced last night they were firing him. And apparently the investors were not terribly pleased with him because that news was able to really boost the stock and was able to close a large portion of that gap. And I still think Groupon, just the business model is not a sound model, and I don't think replacing the CEO is really going to change that. But you could see a short-term transitory bounce to sort of fill that gap. And you have another gap up here. If we get this thing out of the way, you have another gap here. It's around $7, $7.50 area. Could I see Groupon maybe get up there? Maybe, but I still think there's a lot more compelling things and a lot safer things to trade in the market rather than a company like Groupon, which some people say it's a race to zero with that business model, but we'll let the price action do the talking there for us. We'll take a look at Bank of America, which is one I talked about this morning as one of the weaker bank stocks that you might look to short if the market was able to get some follow-through weakness. But the market was not able to get that follow-through weakness, and Bank of America was actually very strong today. So that play never ended up triggering, never broke below that low, which would have been the trigger for that trade. But I still think Bank of America, if we do get pressure on the market, if we do get some pressure based on European headlines again, which we saw the Italian election sort of destabilize things a little bit. If you do continue to see European headlines and the sequester continues to drag on, I think you could see the banks weaken. I think Bank of America is one that you could look to short. And you have that $11 really clear point of reference there in Bank of America. Another one we'll look at that was a news-driven move today in ISRG. It had a huge sell-off after its earnings report. It's a high-priced stock up here. Had that sharp sell-off, but then we had an upgrade this morning from Cantor Fitzgerald, which was one of the big catalysts that helped ISRG open a lot higher. It was basically an analyst coming out and saying there was a very big overreaction to the company's earnings report, and that sell-off was overcooked, and that was enough to boost the stock back and take back most of those losses from yesterday. And in general, I think right now the market is trying to build a range in these upper levels. I wouldn't get overly aggressive trying to chase extremes of this range. Is something we talked about this morning, is that let the market build this range out, take a very stock-specific approach, a scalper's approach, a tactical approach, as Scott would say, rather than a portfolio approach, and let that wedge pattern develop if that's what we're going to see. But continue to follow guys on the virtual trading floor. They're all over the momentum intraday. The momentum trading room, Mike Lee, Steve LeVay, are very good at uncovering momentum and finding the stocks that are in play for the short-term type trading. And if you're taking a long-term perspective, I wouldn't panic here. This is nothing to really worry about, this sort of consolidation we're seeing, even though the ranges are getting a little wider, which is a red flag, which we also talked about this morning. Continue to see if that range tightens and if volatility does start to shrink a little bit, and then we'll start to look for more calculated setups from a swing trading perspective. This is John Darcy here for the Daily Recap. Everyone have a good weekend.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.